Wendy Trafton's here. I'm Sean Sheehan, where we'll go through some slides here related to the program closeout. We know folks are still dispersing the grants. You may have questions about that when we get to the question and answer period. Anything and everything is fair game from the couple organizations who are still getting their SAM.gov worked out to those of you who've just gotten your checks and are dispersing it, to those of you who have dispersed all your funding as premium pay to your employees and are wondering about these next steps. So we've covered the eligible employees, and the other parts in past sessions have those decks up on the site. So the slides we'll go through relate to these closeout reporting. But again, feel free to put any questions related to anything either in the chat or raise your hand, and we'll talk about it all. So just to start really with go through the program overview, just a reminder again of the website where you can find these materials. There's 3 facets of closeout submissions that we'll talk about. The financial report of what you spent, assigned attestation, and then the program evaluation reporting. And then if you don't spend all of the grant funds, we'll talk about how to send that back to us. And then again, like I said, any questions there. So the first piece, as I mentioned, just up by the up on the website, which I think you probably all have bookmarked by now. It's linked right from the Agency of Human Services homepage. We have the program guidance up on there. We have FAQs. We put webinar slide decks and videos, as well as reporting and attestation materials, and the specific reporting materials for closeout, as well as this video of what we're recording right now, and the slide deck. This slide deck will be posted by the end of the day. As far as the financial reporting goes, you may have already seen this on the website for round 1 grantees. This slide, I was lazy, cribbed it, I think verbatim. But so round 1 grantees have already seen this. The purpose of the financial reporting is just to make sure we're being compliant with state and federal requirements for the grant that we've received, that we subgrant out to you. We've gotten some questions of, is there a required format like there was for the application for counting full-time equivalents, or like there is for the evaluation reporting? The answer is no, there isn't. The reason we didn't make a required template was we know many of you have your own, or I'm sure probably all of you have a payroll system, anything from QuickBooks to an external payroll system or something you have and use. And we wanted to make it as simple as possible to export required elements and get that to us. So that's really what it comes down to, is these bullets here for what the minimum elements are. We need these pieces to be in there. We need the names of the employees for each, or unique identifiers for each employee who received the premium pay. As we noted, if there's employees with the same name, that's where we need a unique identifier, such as an employee number or a birth date. If you don't have any employees with the same names, you can just use names. The date or dates that each employee was paid their premium pay, how much they were paid, and then a grand total of how much premium pay was dispersed. If at all possible, it makes things a lot easier on our review side, and potentially on your side, for us not coming with follow-up questions. If those numbers clearly tie up, if you're able to give subtotals of how much was paid on each date, subtotals of how much was paid to each employee, that's what we'll be looking at as we review the materials, and the clear and easiest to understand it is will be helpful. Oh, and right, I admitted to cribbing exactly from what was on the website, and I clearly shouldn't have said issue your next payment, because that's not applicable here. Everyone's paid in a lump sum, so clearly I shouldn't have pasted verbatim. I see a question, if it's a clarifying question around the financial reporting, feel free to Christy to jump in.
Hi, Sean. This is Christy from White River Family Practice. Can you hear me okay?
I can, yes. Yep.
Okay, great. So my question is FICA taxes that are taken out, that can be included in the disbursement as well, like we can account for that. And for folks who had started maybe 6 months ago, 4 months ago, we can prorate their amounts, correct?
Great. Yeah, two great questions, Christy. So yeah, on the first front, and I believe they're both covered in the program guidance and the FAQ. As far as the FICA taxes go, yes, any costs that are directly marginal costs that they're directly related to giving this premium pay to your employees, then you can account for that. So the employer portion of payroll taxes, because that payroll tax is a fixed percentage of pay that's given to the employees. So you give them an extra couple $1,000s, you have that commensurate amount of FICA taxes, and that can go against the grant. You can report that out here in your financial report as you pay them. Even things that aren't FICA taxes, I think another example that would be fair game would be, say, retirement. If you have a policy that you give a 5% of your employees pay into every dollar they earn in wages, you give 5% to their IRA. That would be fair game as well, because it's tied to that 5%. What's a couple of things I think to flag around that we found in some of the first rounds of reporting, is to be sure not to double count just where that's broken out. We had some cases where people had the pay that was in their employee, took the employee portion, which was included in their wage, and then also kind of double counted. So just as long as you're making sure it's the employer portion or not a piece that you're double billing, was one thing to flag. A second was, as we note in the FAQs and the program guidance, no indirect, no indirect costs, or no overhead costs, no admin. If you pay a payroll company to run a payroll for you, that can't be billed against the grant. If you contribute to your employees' health insurance, presumably that can't be paid for, because that's a fixed dollar. If, say, you contribute $500 per month, it doesn't matter that your employee got an extra couple $1,000. You're not paying anything more for their health insurance. I think those are all the common things we saw, unless Wendy or anyone else. Wendy, if you remember any other common errors we had, or if anyone else has any questions related to this subject.
Thank you. I don't have anything to add.
Great. Thanks, Wendy. Thanks, everyone. Now, to your other question, about the people who started, say, 4 months ago or 6 months ago being prorated. Really, that comes back. I'd encourage you to look back at the part of the program guidance and FAQs related to the eligible employees and to the disbursement of funds. Where it really comes down to is you have a lot of discretion about how you what reference period you decide to pay out these funds. It can't be prior to last April, and it can't be past this April 9th of 2023, because the public health emergency ended on April 10th, 2023. But you're supposed to pay employees who worked during a reference, who did similar work during a reference period, similar amounts. So for example, if you had an employee that started 4 months ago, and you are giving your reference period, you're paying people, say, extra $2 an hour for every hour they worked in March, or from February 1st through March 31st, then there would be no proration per se for somebody that started 4 months ago, because they ostensibly would have worked the same number of hours as somebody that started a year ago. If you decided you were going to have a long reference period of giving somebody, I don't know, 25 cents an hour for every hour they've worked since September 30th to March 31st, then somebody who started 4 months ago would get less pay. Or again, you don't have to do it that exact per hour. You can do buckets over a reference period. So you might have done people in the last 6 months who worked at least 1,000 hours. They get $2,500. People who worked at least $500, 500 hours over those last 6 months, they get $1,500, and so forth, bucketing it that way. That would effectively be a way of giving people that have worked a long time more. And again, I think as we talked about in some of the other calls, this is really where it comes down to the discretion in some ways of the employer, is if you want to honor people that have been working for a long time, you may want a longer reference period. If you're wanting to pay people who have started, give a big incentive to everybody who's currently working, you may have a shorter reference period, as I mentioned, maybe just running it February or March 1st through April 9th, something along those lines. Of course, it has to be, people have to sign that commitment to work the extra 3 months. So in either case, you're not going to be, paying people who were working in December and separated in January or anytime since. Great. If there's other follow-up questions on that, we're happy to circle back. And otherwise, we'll continue on here. On the financial reporting, the dates for the rounds 2 grantees, you had either 90 days from the date of your grant, that's the date that the check or the electronic payment was made, or the grant award end date, whichever is sooner. And the grant award end date, being the end of this state fiscal year, or June 30th, so 3 weeks away, I think it's going to be the relevant date for maybe everybody. I don't think we got any checks out prior to March 31st. If we did, so effectively June 30th is the date here. And the reporting due date is 15 days after that deadline. So effectively looking at July 15th. July 15th is a Saturday, so ideally getting it in by July 14th, but the system will give you a couple calendar day grace period. So if you turn it on Monday, the 17th, the system will still let you submit and would be okay with that. That's it. And as far as what you're submitting, it would be these 3 pieces. You'll be able to log into your system. You'll be able to upload that financial report we just discussed that had those minimum elements. Number 2, this reporting certification that we're looking at now. We have a link on the site. We'll put this back out in an email. This is just a testing. You may not be able to see on your screen. You can download and look at it, just that you met those requirements, not that we've talked about, not paying people more than $13 per hour of premium pay, not paying more than the overall cap, so on and so forth. Christy, you have a question on this?
Yes, I do. So I was approved for this grant about 2 weeks ago. So we haven't received the funds yet. So I don't know if that timeline is feasible if we haven't received the award.
Correct. Yeah, absolutely. So on that side, right, and I know you said you're with White River, Christy, right? I know that's one of the couple that's still business office going through confirming the pieces there. So on that side, we're happy to follow up. If there is any cases where the funding, doesn't go out or goes out, like even at this stage, with yours, we'd be able to talk about some amendments kind of offline for when it happens. Hopefully we get that unstuck soon if it works to get it right out and for you to make the payments, by the end of the month. I think that would be ideal and smoothest all the way around. If an extension on that is needed because of getting this part approved, we'll be able to do that. It'll just be, more paperwork on both sides of working with our business office. But we'll definitely commit to making that happen.
Now,
And
Sean,
yeah.
when would we expect it to be sent out if it was approved 2 weeks ago?
Well, on yours, typically when it approved, it would be going out within a couple days of that. In your particular case, we can follow up. Wendy may remember offhand too. Of what we heard from the business office, it was, I think, a change with what was it with the W-9 and what was in the business office's payment system. Neither
That's accurate.
Wendy nor so it wasn't a normal happy path. You would have, since you were approved a couple of weeks ago, you would have gotten the payment a couple of weeks ago. We've been following up with them. They have to make various changes and fill out requests on their side because of what had been the address registered in the system, making that change. So it's involving multiple state agencies and the good bureaucracy on or system computer systems on
Now, is
that
that
side.
paper check or is it ACH that comes?
It'll come, well, typically it comes however you usually get paid by the state. If you haven't been paid by the state in the past, it would come by paper check. But if you receive payments from the state for other work, other projects, other grants, and that comes by ACH, this will come by ACH as well. I say typically because given your particular case of that change that's being made from what they had in the system, I don't know the details enough about if that resets it to a paper check if you had been getting ACH, but typically the answer is however you normally get paid. And if you don't normally get paid by the state, it'll come paper check. Great. So thank you. So the third piece we have on the reporting is the evaluation reporting. And this is the report that really we need to be able to show to the legislature, to the feds, everyone that spends the taxpayer dollars to show the impact relative to legislative mandate for dispersing these funds. That's the reason behind it. Again, you can submit it with the other pieces, and again, this piece will does have a standard template, but fortunately, the template will look very similar to what you're used to, specifically very similar to that application you filled out back earlier this spring or late winter. Has the same 4 steps, so forth. The questions just being slightly different, but step 1 very similar. You're just going to fill out your contact information, which provider type you have to pull down, and what provider type you are. One thing I'll flag here that's different is that we had the dynamic version that worked for most folks, but there were a handful of folks that didn't, based on I think what version of Excel they had. And it seemed like in this round 2, there were a higher proportion of providers that had a Excel type that didn't work, and we sent the basic version over and had some back and forth emails. So just to simplify things, we didn't use the dynamic version here in the final reporting. So if you were if you were an applicant who had to use that basic version, you don't have to worry about finding the right version. We'll just have the basic one up. The difference for those of you, for the most of you who did have the dynamic version, it'll be, well, we'll call it, it won't pull from your step D here. If you say you have yes to administrative staff, that's not tied or connected to the next steps we'll refer to. But other than that, it's going to look very, very similar. And on this step 1, the one piece that will look different is on the lower right part of step 1. It'll ask what reference periods in calendar year 2023 you paid out. And for step 1, folks, if you actually did have, if you are using a long reference period and are paying people back from 2022, it would be okay to enter them, to enter that period here. We just distinguished this calendar year 2023 because round 1 grantees filled out this report mid-year. So they filled out any of their 2022 reference periods. And at the time when we made this, was thinking round 2 would all be in 2023. But of course, that's a assumption that's not necessarily true, as we had on the question before. So if you chose to use a reference period that extends to 2022, you can still put that in here, because obviously this is the only time you're filling out this report. And we ask you to spend what you paid for that total amount, which would tie to what you had in your financial report. I think for many of you, it may just be one reference period that you're paying, but there could be some. For example, this example I typed in here, maybe you had a March reference period. You thought you were going to pay everybody if you had an $18,000 grant, and you found out that an employee left in between the time that they signed the commitment or you did the calculations, and when you did the payroll run, or maybe they didn't sign, didn't make their commitment to stay on another 3 months. So you found that you have another $500 to spend. In that instance, you're perfectly able and actually highly encouraged. We want you to get all this money to your employees. We don't want to get it back if you can put it to good use. So if you have that $500 left and you say you want to pay somebody, do a second period there, you're certainly allowed to do that. So in this case, say from people that work April 1st to April 9th, you're going to pay them another 80 cents an hour, if that's what it comes out to when you do your math of what you can pay to use up that amount. So that's what you would enter on step 1. Step 2 also is going to look very similar to the application you filled out earlier, with the one noticeable difference is you'll see that new column K, which is also K for the full-time employees, column U for the part-time employees. That's just asking if they received premium pay. So anybody who didn't make that commitment to stay on another 3 months, or they weren't eligible employees because they were working, from home, or they weren't doing eligible work, or they were, over income, didn't meet all those tests, they would be a no if they did receive premium pay during that January to June period, which for round 2 people is everybody, because now is when you're paying your pay. You would put a yes next to them. Other than that, step 2 is the same. Oh, actually, one other piece. Step 2 also has this table 5, which asks a new question of number of people. So not full-time equivalents, just number of lives who received premium pay and left before April, which actually, as I think of it now, that shouldn't apply to any of the round 2 people. Correct me if I'm wrong, in case any round one people are listening, I'll explain it here. This would be an instance where if you had a with this evaluation report, actually I should have stepped up. I think I skipped right past the piece. Was with this evaluation report, really we're trying to compare the before and after. So with this isn't for referring to the reference period of when you paid out the employees. This is referring to work, and we have this in the instructions here, to anybody who was on payroll, anybody who worked between April and June. So if they worked that quarter of April to June, just like with that initial application FTE sheet, you had the option of either doing the full quarter, reporting on the full quarter of October to December of 2022, or choosing a 12-week period within October to December. For this evaluation report, we're looking at April to June of 2023, and you have the option of either reporting on those 13 weeks, April 1 to June 30th, or if it fits your payroll better, choosing a 12-week period within those 3 months. And so really this question here that we were referring to in table 5 was just somebody may have, in the case of somebody who got a grant in around one person, they may have done paid out a grant, had a reference period in January or February. Somebody may have gotten that payroll, they're showing up on the financial report, but they then left, say March 15th, they left. So they wouldn't be showing up on the evaluation report because they didn't work during those 12 or 13 weeks of April to June, but they did receive premium pay. Again, I don't think you have to list that. I don't think it applies to anybody from round 2 because of the timing of when you got your grant and we're dispersing it. But if anyone has questions about that, or if you are a round 1 person, feel free to ping me there. Oh yeah, the other piece of flag, the other difference with what you had from your application, if you filled out the dynamic sheet, was where we had type of employee that was based off of what you selected on step 1. You'll remember if you chose administrative, yes to that, and no to everything else, this type of employee would only populate based on your choices. Because of the issues that some folks had with their version of Excel, we just did a basic version. We didn't have that port in. What that means is this type of employee is going to give you the 15 options, regardless of whether or not you have that type of employee. We hope that's not a burden. If so, let us know. We could bring the dynamic back, but it seemed like bring it back would be more weighing, which is the bigger complexity. So we left it off there. Again, with the evaluation reporting, if any vacancies you have during this April 1st to June 30th, 2023, if you have multiple positions that are vacant, for example, if you had 2 RNs that you're hiring for, we ask you to just distinguish them, say RN 1 of 2, RN 2 of 2, just with that same format that you did in the application. The step 3, likewise, with this basic version, remember in the dynamic version, you didn't see all of these rows. You only saw what you had selected, that you have employees. Say dentist office you just chose administrative staff, dental hygienists, dental therapists, those 3. Everything else you said no to, you would only see those 3 rows. Here you're going to see all the rows, but we just ask you, as we note here, if you don't have any employees of the other types, just leave those rows blank. So in that example, I just said you would enter the highest hourly wage of your administrative staff, your lowest hourly wage of your administrative staff, your average hourly wage of your administrative staff. Same thing for dental hygienists and dental therapists for those 3 rows. All the rest of the rows you would leave blank. Step 4, again, this, you'll remember this is exact same as in your application. If there's any, these on the left there is just pulling from what you had in step 2 if there was any duplicates. So if nothing is red, you can ignore this step. In this example we're seeing here, Jane Smith showed up red because it showed up twice under part-time employees. That employee number 1, 2, 3, 4, 5 also shows red. So we just ask for an explanation of the duplicates. So to just put in a short note, we have 2 Jane Smiths, but back on step 2, we entered their birth dates to show they're different people. Employee number 1, 2, 3, 4, 5, that's the same person. They switched from part-time to full-time in November. In this case, maybe you'd say in May, because we're looking at that April to June period. So it's the same person, together their 2 FTEs add up to less than 1 FTE because they were full-time for 6 weeks and half-time for the other 6 weeks. And so we can obviously look back at that and verify it, but that's what we ask if you see any red, to just give those notes. And then lastly, we didn't flag this in the application, but one thing I thought of was just this high level calculation. It is a tab that was there in the application as well. You don't need to do anything here. Actually, you can't do anything here. It's not editable, but I think it's just another way, if you take a minute to look at it and just make sure it aligns with your staffing metrics. We had some instances where some applicants had some vacancies and just forgot to enter them in that vacancy section. I'm sure we know we're all busy kind of multitasking and start to fill out a table. If you looked on here and saw, oh, we have a 0% vacancy rate, that can't be right. We had a bunch of vacancies, and you look back and see that you forgot to fill something out, or if it says you only have a few employees. So that's the only reason we have this flagged here. Nothing for you to do, just another way of kind of checking the work and preventing some back and forth from our side if we catch anything. Lastly, the returning unspent grant funds. Again, don't want you to have to do this. We highly encourage, if you did a payroll run, did a premium pay, find out you have a few $100s or a couple $1,000s left. If it's not a hassle to distribute that as a small run, as we noted, for a different reference period, giving a small amount back within all of the normal parameters, that's awesome. Please do that. If you can't, or it's a big hassle, or it's a small amount of money, easier to return it, whatever the case may be, this is what you do. We just ask that within 30 days of that final reconciliation report. So, we're looking at, I guess, say roughly by August 15th, sending back to AHS, Human Services, this address, making the check out to State of Vermont Agency of Human Services, and just putting your grant number on the memo line of the check. That will be the final step for closeout. I've talked a lot. Happy to take a break. Happy to take any feedback. If people want, I think there was something in chat. I'll open up the chat. Wendy and I can look at that. If people want to put their hands up, that works as well. See, Michael, yep, thanks for the kudos, Michael. Always good to hear. We're being clear. See John's question here. Understand the employer payroll taxes and employer retirement contributions can be paid from the grant. do these amounts affect the $13 limit and or compensation limit as measured for each employee? Wendy, on that, my understanding, Wendy, we can, is that they wouldn't count. The $13 is on the wage side. So the payroll, the FICA, retirement and pieces would not be counted against that $13 limit. Is that your understanding too, Wendy, or should I confirm that?
That makes sense to me. It sounds like that would be additive to the $13 gross amount that would be going to the employee if that was the decision you made to provide a $13 per hour premium payment.
Yeah, absolutely. Thanks, John. That's my understanding too. Yeah, the one thing that we did find that does count toward it that we're flagged on is overtime pay. So if people are working overtime, getting time and a half, then that's a case where, and we know we talk about this, I think, extensively in the frequently asked questions document. But because the amount you pay as premium pay counts as a base, overtime is time and a half on top of that, that would be something you would have to look for if you were making that decision to pay somebody $13 an hour. Again, for the amount of the grant we have that you have to distribute, I think in most cases, unless you have a very short reference period that you're using, that per dollar amount is going to be a lot lower. And we do encourage people, particularly if you pay people time and a half, or that could be a factor, using a slightly longer reference period, which makes it safer to stay away from that limit.
The next question.
Yep.
Okay.
Go ahead. Go ahead. Wendy.
Trying to save you a few words there.
Yeah, please do.
The next question is about the reporting time period. It says the grant period ends 6:30 and we only have until 7:14 to submit all the financial documentation. That's a tight timeline with summer vacations. Asking if this is the timeline. So yes, that is the timeline that we have put forward. But I will indicate that is something if you get started on now, you don't have to wait till June 30th, particularly for those entities that have distributed the funding. I don't know if you have anything else to add to that, Sean.
Yeah, no, I think that's the good, point. I think it's right as Wendy says. I think the one piece that really, if you have distributed the funding, that you wouldn't be able to fill out until July 1 sensibly would be the evaluation, reporting, since you're looking at the hours that employees worked between, April and June. If your staff that was doing this report is, going away those 2 weeks, or it's problematic, shoot us an email and what kind of need or what would be reasonable, and if having a few day extension because of vacations is needed, we can work around that. There may be some issues with submitting it to what the portal will allow you to submit. So for that reason, anyone who can meet the deadline will be easier all the way around. Like I said, if there's extenuating circumstances of the vacation of the people who would be filling this out and so forth, not aligning, shoot an email to that workforce email box about what timing you need, and we'll work with an alternative method to get that documentation, emailed to us, or whatever the case can be.
The next one, I'll read it, but I'll ask you to answer it.
Okay.
If you have an employee who worked 4 days in a metro area and 1 day in a non-metro area per week, is it appropriate to calculate a weighted average of the two areas for the compensation limit?
Yeah, that's a great question. And my initial thought was to clarify actually your read of that limit is to make things simpler. And as I was about to say it, I said, I hope it makes it simpler. It might make things more complex, but the reason is, and of course, what John's referring to here is what we talked about before with the eligible employees, and we sent out, I think in that email, you'll see that the new numbers have been posted, which is good news for people with higher salaries thanks to inflation. That's a higher threshold for people in the Burlington metro area and in the southern non-metro area and northern non-metro area. But the clarification from John's interpretation is where they worked. It actually isn't where you work. It's where you reside. So if you're based out of, say you have a dental practice in South Burlington, but you have an employee who lives in Montpelier, and drives to South Burlington every day, they're subject to the non-metro area because they live in Montpelier. It doesn't pertain to the fact that they work in South Burlington. So my initial thought was, to John's direct question, it makes it easier for John. He doesn't have to track. That employee lives in South Burlington. They're in the South Burlington metro area. Their income can be up to, what did we say it was? It's like over 90,000 now, I think, right? 94,000 maybe. But he has another employee who lives in Montpelier. They're subject to that 80 some odd thousand dollar threshold. So easier in the sense of this particular question, doesn't have to do any weighted average or figure out where people are working. Harder in the sense that your one practice doesn't have the same thresholds for all of your employees necessarily. And again, blame that one on the feds. Wendy and I had nothing to do with that. That's Bureau of Labor Statistics, and as we mentioned in there too, and as you'll see, I'll flag it again just because for those who didn't see it, as we noted in the program guidance, what they have as metro area and non-metro area makes zero sense. You see, I think Duxbury was included in the Burlington metro area, but Waterbury wasn't. So go figure on a lot of pieces there. I see Patricia's question, where can I find the evaluation report worksheet on the website and don't see it? I'll have that up by the end of the afternoon along with this video and this slide deck. We'll have that evaluation report worksheet, both the 12-week and the 13-week option. And I'll send an email to everybody. Everybody who got an email from me last week about this webinar will get an email with that link too, but it'll be up by 5 today. I see John's question, given our deadline to pay employees, can you give employees a deadline to sign the acceptance form? And if not signed, that would constitute a valid rejection of payment. Yeah, absolutely. That's something that I think even for round one folks, who weren't on as tight of a deadline, they wanted to get their payroll runs out and pay people sooner rather than later. So absolutely fine, to give that deadline. I think the one thing would flag on that for it's probably less of an issue with some of the smaller practices, was somewhat of a bigger issue we saw with some of the larger organizations in round one. So certainly maybe the case with some of the primary care folks on the call now. Is just kind of, I wouldn't make it so short that you miss out with people who might be on vacation, number one. And two, if you have employees who don't regularly use email, I wouldn't just send out an email. That was something we heard some with the round one folks who, if they were sent something to sign, given a couple days to turn it around. But if they were out that week and had no way to see it, then there was some bitter feelings. That wasn't something that we would ding you on, but for the spirit of the it's an employer discretion, so you could do that if you want, but for the spirit of it and the idea behind the retention of keeping employees happy, That left a sour taste in some folks' mouths. And so the other thing was if people don't use email regularly, if you have a staff meeting or if you have, supervisors have one-on-one check-ins, having some way, I won't spend a lot of time belabor that point here, because you know how your organization works. But to John's question, we just flag that to be attentive. You decide how people have to make that commitment. You just need to have some record of it. But to the extent you can give people a fair shake to make that commitment, the better for your business, I think. Can you send an email with the evaluation report to all of us? Yes. Yeah. What I said, when that's posted at the end of the day, we'll have a link to the website, evaluation report. Those two options will be up there. Will the state be requiring a list of employees who fail to satisfy the requirement to stay for the 1 calendar quarter? No, that's not direct, not as part of the normal reporting here. And as you mentioned, even that you're required to get that good faith commitment from them. You're required to retain that good faith commitment. You're not required to submit it as part of your final reporting. You are required to retain it for audit purposes. So with neither Wendy nor I being in the experts on auditing, I'll speak for myself. If Wendy knows more about it, Wendy can pipe in. But I think that's the kind of thing. If there is not, they may ask to see, okay, did you get this good faith commitment? Maybe asked if did employees leave. As we've flagged before, you're not responsible for an employee who makes a good faith commitment to stay on another quarter and then bails on you at 3 weeks later. You did all you could. We've been asked, are we going to hold that employee accountable? We can't. You're our sub grantee. We're the grantee from the feds. You're our sub grantee. The employee isn't beholden to us, but we're not going to hold you accountable for their behavior or choice. We're just going to look, did you get that good faith commitment? Yes, you did your part. I don't see other questions there or hands. If people have any other questions, yeah, you're welcome, John. You're welcome, everyone. We're happy to help. We appreciate you taking the time to join this webinar to ask questions. If you have a question, other people likely have them too. People that can't make the call likely have them, and when they watch the video, it will help them fill out the reporting properly as well. So we appreciate your time. We're available if you have other questions. It's been great working with all of you this winter and spring to get the funds out and to support your employees who support Vermonters and keep Vermonters in good health. So we really appreciate all that you do. Wendy, any final words?
No, thank you. Looks like we have potentially another question. Otherwise,
okay.
I was gonna.
Yeah.
Gotta thank you.
Thank you.
So I guess we can give everyone a 9-minute lunch for those who didn't get a chance to grab one.
Terrific. Well, thank you, everybody, and we'll be in touch by email later this afternoon. Take care.
Thank you.